Why is XRP not at its new all-time high? Because they don't understand the sentiment. They don't understand the liquidity shift, right? What I mean by that, liquidity got sucked out of risk assets and came back into safer haven assets. It's that simple. Alrighty, what is going on, everybody? Welcome back to another CYPRX video banger. Ladies and gentlemen, buckle up your seatbelts because everything that we have been sharing with you all over the past consecutive couple of weeks is aging like fine wine. Price predictions, fundamentals, accuracy that you have never seen via retail traders and investors in the crypto ecosystem. And hopefully after today's video breakdown, if you stick around for the entirety of it, it shows you exactly that. Welcome back to the CYPRX platform. If this is your first time here, do me a favor, smash that thumbs up button and subscribe if you like and enjoy these educational video breakdowns. We're going to be discussing and talking about the fundamental backdrop in the digital asset ecosystem, why over the past 48 hours, over $100 billion was liquidated from the digital asset ecosystem and why that environment was created, and how we've been discussing and talking about paying attention to certain factors in the crypto ecosystem that could weigh on risk sentiment, proving accuracy time and time again. We've also been calling out psychological levels and targets for dollar cost average areas of interest on both XRP and XLR publicly to you guys by utilizing institutional delta zones. They are the most accurate institutional trading levels that retail traders have access to, and we here at CYPRX are the only individuals on the internet with access to them, provided via our institutional scalper with over 13 years of institutional experience. So we're going to jump into all that in today's video breakdown. Again, do me a favor if you're new here, or if you're not new here and you're a recurring individual and you've been following along with these price prediction and these fundamental analytical videos, smash that thumbs up button, subscribe. We do appreciate the love and support. So let's jump in. I want to set the tone with today's video breakdown because this is aging so freaking well, y'all. I swear, show me another retail trader. I get so hyped when this happens because I know the followers that are actually paying attention to detail, and I'm going to show you that in today's video breakdown, are benefiting from this info. We do not pop smoke here. We do not pump hopium. We go in detail in facts, fundamentals, and real sound psychological and technical analysis. Okay. I mean, oh, wow, you guys got to tap in. Okay. All these Fibonacci moon boys, these individuals in the retail space that use indicators and tell you that some magic indicator because the RSI is crossing over and the EMAs are doing this or whatever, this is why charts are going to do this. No, that is so illogical. I'm telling you guys right now, when you tap into the institutional side of things, institutions aren't sitting there on TradingView paying attention to indicators. Okay. They're not. They're paying attention to the macro. They're paying attention to fundamentals. They're paying attention to liquidity drivers. All right. What's driving liquidity to these financial markets? And we showed you this video breakdown 2 weeks ago. 2 weeks ago, we were telling you guys to pay attention to this and watch how well this aged. This is the head of investment research at Signum. Okay. This is from 2 weeks ago, still only has 121 views. Do y'all remember in the previous video? I told you guys when we first watched it, it had like 6 views. In the last video, we told you it had 100 views. Now it only has 121 views. Okay. Oh, this is just goes to show how many people are not paying attention to this stuff. But take a second here and listen to what she says is the biggest risk factor to risk assets across the board.
Certainly over the coming months, I don't see the major risk coming from the Fed losing control. I would say the major risk appears currently some geopolitical situation spiraling out of control. And what would be the most negative for financial markets would be something happening in the Middle East that would affect the oil price very significantly. And
boom, right? So we told you guys to pay attention to this. She said the geopolitical factors in the Middle East would be the biggest risk factor to global financial markets. We tried to warn you guys about this, okay? Now, look at what's taking place across the board. First, I want to give a shout out to Nick Young because, again, like I said, individuals that are actually tapped in. Nick Young said, in case anyone was wondering why there was a slight market downturn in the crypto markets yesterday evening, see the man in core, that's myself, and his research team, because I cannot deny them. They had a big part in this. Research team, shout out to the CYPRX research team, mentioned it days in advance, always bringing education and value. And what did he post? He posted updates on the Middle East tensions. Now, just to show you guys what it is that he's talking about. Well, if we go back to the charts, dates are important. Remember, you're following individuals that are doing price analytics and predictions on the internet and given fundamentals, they need to have dates backing that they showed the information to you all well in advance, which we do here at CYPRX time and time again. The accuracy is so insane here in this community. I cannot stress enough. No retail hype, no bullish moon boy. If you guys want straight, valid education and pinpoint accuracy, come tap in. If we go back to the charts on the total cryptocurrency market cap, look down at the bottom of my screen. You can see it's October 20th, 2024, here at this high, roughly when crypto was trading at about $2.34 trillion. Okay. From this high, if we take a measuring tool from the high of October and we drag it down to the bottom that we just hit recently in October, we can see that over $176 billion has been liquidated or pulled back in the digital asset space. Okay, there is a reason for that. There is a reason for that capital outflow, and we had been talking and mentioning this. So again, here on October 20th, now let's go look back at the public updates that we were giving you guys on YouTube and Twitter via fundamental reports, hand typed out for you all, and video breakdowns showing you guys Zoom calls from within our private community. So here, you can see if we scroll right down here, this is a video that was uploaded on the X Space October 20th. Just in, Bitcoin hit $69,000, and I had updated levels on XRP and AXL, which we'll get into in just 1 second. We'll go over that video. But in this video, we talk about geopolitical risks. I read a fundamental report that we wrote back from October 20th, mentioning that geopolitical risks still stand in the market as a potential catalyst that could create a market pullback. Same thing in this video update on October 21st. We had been mentioning and warning the same thing. You can see the dates right there, right? The information, the timestamps is there. Now, if we actually go into the detailed report, this is the report from within our private CYPRX community here. You can see, I want to read this for you guys because, again, if you want access to these reports well in advance before the manual retail traders get access to this news, come join the private Discord. Yes, I get it. There's a paywall, but this information is so valid. Right? Charging $50 a month for this is absolutely peanuts compared to the value that you get from it because you understand market dynamics. You understand when it's time to be dollar cost averaging in, when it's time not to, when it's time to be taking profits, and what's actually going on in the market, not being confused like all the rest of the retail sheep. Here's the date timestamped on this fundamental report, October 20, 2024. We were talking about, the overall positive risk sentiment, how crypto had seen a significant increase in October, how we hit a high of, about 2.34 trillion, a high that we haven't seen since July 31st, 2024. But right down here, if we scroll down again, breaking down in detail what factors were contributing to the risk on market mood, here you can see in red. We said risks that still remain in the market, U.S. economic data, Japanese overall outlook. And then here at number 3, geopolitical tensions. We said any escalation, such as Israel's response to the recent Hezbollah drone attack, could disrupt markets and trigger a risk-off sentiment. This is back from October 20th, 2024. Here, again, you can see where crypto prices were back on October 20th, 2024. Let me zoom in for you guys so you can see, right? We were operating at a high, and we have now seen over $176 billion of liquidations after the events that have unfolded. Warning you guys in advance, no fear. We didn't tell you guys crypto was going to freaking go down to $500 billion and we were going to see mass fear and panic. No, we were simply just giving you all accurate analysis. What could weigh on crypto prices? What could create a market pullback and a shift in sentiment from all the greed that was driving assets across the board just a couple of days ago? Well, geopolitical risks. Right? And now we're seeing that unfold. So let's fast forward to today. Now that you guys have seen the recap, we talked about this, we warned about this. Hopefully my followers and you individuals on the internet that have been paying attention to the info that we share here at CYPRX have tapped in. And now you can see, dang, Cyprus and his team, they are trying to provide accuracy. Yeah, these fundamental breakdowns that he delivers, they're boring as crap. But maybe I should start listening because dang, he actually knows what he's talking about. And he's not throwing fundamentals and indicators in my face, giving me bullish moonboy hopium that's driving my dopamine. And he's actually trying to educate me, right? So again, smash that thumbs up button and subscribe if you've been here. So today, this was yesterday. This is a post that we made to the private CYPRX community in our fundamental update. I just copied a segment out of that. So I want to read that to you guys. But this is what our private community gets on the drop of the dime when the market sentiment changes. So the cryptocurrency market saw a decline of over $100 billion in value, which I just showed you all as geopolitical tensions have escalated. Well, what took place real fast, I just want to show you the fundamental. I'm not going to read this part of the fundamental. We're going to go back to Twitter. But Israel military strikes Iran as payback, further risking Middle East tensions. Like you cannot get this. This is from October 25th, 2024. Ladies and gentlemen, we warned you about this 5 days in advance, and people still don't want to pay $50 for that. Come on now. That is gemmed information you got in advance. You could have reacted. I remember Zoom calls with the private community mentioning, hey, we should definitely consider taking some profit if geopolitical tensions increase and escalate, considering that the crypto fear and greed index hit a level that it hasn't seen since July 2024. Market dynamics are starting to shift, right? I'm telling you guys, it is insane, the info that we're providing here at CYPRX. So to continue, Israel military announced precision strikes on Iran's military targets following Iran's missile attacks on Israel back from October 1st, which involved around 180 ballistic missiles. While most of these missiles were intercepted with assistance from U.S. forces, the situation remains volatile. The Israel military stated that these strikes are a response to the ongoing threats from Iran. The backdrop of this military escalation stems from Israel's prior actions against Iran's proxy. We won't get into all that detail, but historically, I want you guys to understand geopolitical instability tends to weigh heavily on risk assets. Now, again, this is temporary. This isn't to drive fear, uncertainty, and doubt. This is to show you all opportunity. Okay, discount prices. When should you be DCAing in? Not when prices are pumping, when prices are discounted. So this includes cryptocurrencies. As tensions rise, investors often tend to retreat to safer haven assets such as gold, silver, US dollar, causing declines in digital asset prices. Currently, the cryptocurrency market cap hovers at around, this was yesterday as of time of writing, 2.21 trillion, with many of our discounted targets, the DCA levels that I give to the private community members that I'm personally looking at for my portfolio, were triggered in the most recent market pullback for dollar cost averaging. And I'm going to show you again that in detail today. So we are going to continue to closely monitor these developments over the weekend and look for potential opportunities to strengthen our long-term crypto portfolio if the market discounts further. So now that I've shown you guys that we laid all this out on the table and now it's unfolding in real time, not only do we do research by paying attention to individuals, reputable individuals in this space that are telling you guys this, we type out handwritten reports for our private community via accurate fundamentals. But not only that, we give accurate institutional deltas. No indicators on my charts, people. How were we able to do this? Well, if we head over to the CYPRX YouTube, this is from 5 days ago. Today, as of time of recording, is the 26th. So you minus that 5 days. This is roughly around the 20th to the 21st. And like I showed you guys back on the 20th and the 21st, total cryptocurrency market cap was operating at a high that it hasn't seen since July 2024. And in this video, okay, this is when we did our institutional breakdown, our fundamental analytics, where we told you guys in this video to pay attention to the risk factors. We also called out accurate bearish targets on XRP. No fear. I didn't tell you guys XRP is going to go to 13 cents. No, we gave you accurate levels to be paying attention to for DCA levels when the market was pumping. You should never put money, again, my personal opinion, into the market when it's pumping. You should always wait for opportunity by understanding market dynamics and understanding sound and logical technical analysis. Check this out. So at 17 minutes and 51 seconds, again, from a video that we posted 5 days ago when XRP was trading well above 55 cents, right? We were calling out targets of 49 cents. Here is a clip of that video. If the sentiment does shift or any black swan events unfold, my bearish targets still stand at anywhere between 49 cents, any break on 49 cents on an extreme risk off market sentiment, and 44 cents will be my next DCA levels on XRP. Right, so there was XRP 5 days ago. Well, ladies and gentlemen, would you look at that? Remember, these are institutional deltas that I'm sharing. These are not my personal opinion levels. These are not like, oh, Cypress is drawing some Fibonacci on the charts and making some lines on his charts on TradingView, and you know, that's why all of this is coming into fruition. No. These are institutional levels that I'm sharing with you guys. And look at this accuracy, please. Look at this, ladies and gentlemen, please. If this is your first time here, you know, let your jaw hit the floor. From 57 cents, which we called out in a previous video breakdown prior to this one, look at the accuracy. You can see the XRP drop straight down into that 49 cent threshold that we had mentioned in the previous video. And then we start to see some institutional buying, right? Retail traders don't have enough money to move these markets. You have to understand that. When you understand that these are players in these markets that are moving these markets with much more money than you and I. And they drop straight into these institutional deltas, these buy deltas that we had and shared to you guys publicly on X. If you guys go back to my X profile and you scroll down a bit, we shared these all for you guys well in advance. Okay. So I'll give you guys an update on that, but I got to show you guys the XLR call outs as well. Because for me personally, it's important that people that you're listening to prove that they have been accurate. Okay. And that's what we're attempting to do here at CYPRX. We don't mislead anybody. We attempt to try to show you guys accuracy. I can't sit here and say I'm right all the time. 99% of the time, I can't sit here and claim that because that's not true. But the majority of the time, when we implement logic, sound fundamentals, and institutional technical analysis by utilizing these delta zones, you have to understand that the accuracy level increases plus 70, 80%. Okay. And that is very, very achievable. And it is being achieved in our private community. All right. So let me show you guys. Here is another call out. This is from XLR when we were doing our breakdown on bearish targets and DCA levels to be paying attention to. Take a second here and listen. Showing you guys yet again on multiple digital assets across the board that these institutional delta zones prove accuracy time and time again. So just to give you another quick update on price targets that we are paying attention to, DCA levels, in case the market sentiment turns around and flips risk off and we see a significant market pullback, my next DCA levels on XLR will first unfold at 72 cents. If 72 cents is broken, we're looking. And you can see here in this video breakdown from 5 days ago, this is when XLR was trading at an institutional sell delta at 89 to 90 cents, right? Well, if we head over to XLR's price action, you can see that we've rejected that psych level. We rejected the institutional delta. We created some slight bearish order flow, i.e. a break of market structure, some profit taking, and a lower low that led to a new low being made. And where did that new low fall into? That 72-cent target that we had mentioned to the freaking T. Come on now, people. Okay. And these aren't my levels. These aren't like some rent. Oh, Cypress just calling out 72 cents. No, I implemented the institutional buy deltas that our institutional scalper provides for our private community in our chat. So I did buy some XLR at 72 cents, considering that it was just trading at 90 cents just a couple of days ago. We have a significant market pullback and I'm not buying at a high. So yeah, I dollar cost average in. Same thing on XRP. Right. So now that you guys have seen the accuracy, let's do an update real fast. In order to see improved risk on sentiment, we need to see de-escalations in the Middle East. We need to see the tensions start to decrease, possible ceasefire talks come back on the table. Obviously, of course, next week on the macro forefront, we need to see further bets on the table that the Federal Reserve is going to cut interest rates to some degree at their next meeting. That would obviously, of course, improve risk sentiment. No fear, uncertainty, and doubt of a recession possibly taking place. No fear of Bank of Japan hiking rates at their next meeting, sparking further unwinding of the yen carry trade. I mean, there's so many factors, so on and so forth. I'll type out a report for the private community and I'll share that with you guys publicly on X. So make sure that you go follow us on X. But let's just give a quick TA update. Obviously, of course, overall, we need the risk sentiment to improve. If that does continue to unfold, let's do the optimistic targets first. Let's go to the higher time frame on XRP. If we can hold above 49 cents, hopefully we do, because I just dollar cost averaged in at 49 cents, and we can break back above 52. Again, we're going to be targeting those first immediate bullish targets of about 57 cents. We have to break that 57-cent threshold in order to see anything higher than 57 cents, at 62 cents being our next bullish target. We'll get there. We're not going to go any higher than that for now. We'll do an update. If XRP does reach those targets, again, I'll just give you one more target higher than that, excuse me. 72 cents is our next institutional sell delta that we're paying attention to for some slight profit taking. But we have to see a risk on market mood when we have to break that 52 to 57 cent threshold to see any higher targets in an optimistic risk on market sentiment. Okay. It's not just going to require some magic Fibonacci or some trend line breakout like all these freaking bullish moon boys on the internet have been telling y'all. How many people, I'm telling you guys right now, go back in the XRP community right now and prove me wrong. How many people across the board with thousands of followers were telling you guys XRP broke out? XRP broke out of the 5-year trend line, whatever the heck that it's been printing. I guarantee you can go find them. You can go find them. And now, that was back when XRP was trading at 62 to 65 cents. Now it's trading at 49 cents. And those same people are left wondering what the heck is going on. My 5-year breakout that I was touting to my community didn't work. Why is XRP not at its new all-time high? Because they don't understand the sentiment. They don't understand the liquidity shift, right? What I mean by that, liquidity got sucked out of risk assets and came back into safer haven assets. It's that simple because of the geopolitical spectrum. Global investors that are not prone to take on risk in a risk-off environment. All right. So anyways, to the downside, 49 cents still remains. Right now, we're trading at about 51 cents. If we can tap back into 49 cents, maybe possibly create a double bottom and hold that, I will continue to buy more at 49 cents. excuse me, anything below 49 cents, 44 cents still stands on an increased risk off market sentiment. That means new escalations, fear, uncertainty, and doubt in the market weighing on cryptocurrencies across the board. All right. So 44 cents is my next DCA target. If we can double tap into 49 cents, I will also buy more. I still have buy limits set at both levels. However, I did just recently DCA into 49 cents, as I mentioned to you guys back in previous videos, and those positions are currently sitting slightly in profit. Nothing too significant, but again, not buying tops and buying proper market dips. Moving on to XLR real quick, same thing on the updates. No real change. Anything below 72 cents, we're looking at 64 cents for our next area of interest. That would be lovely because that would put me back at my overall average price in for XLR, or roughly around that, give or take. My average price in is roughly about 55 to about 62 cents is when I was buying XLR. So it'll put me closer back down to my average price in for XLR, which will be phenomenal. All right, so 64 cents to 58 cents on an increased risk off market sentiment. Again, that means any geopolitical tensions and escalations or anything weighing on the digital asset ecosystem. That's where I will be looking to plug more capital in. If we can hold above 72 cents and revisit 89 to 90 cents, bullish targets still stand for some slight intraday profit taking at the institutional sell deltas of 99 cents. If we break 99 cents to the upside, we're looking at some profit taking levels of $1.13. So blessings to you guys. I know that this video went past 20 minutes. Dang, see, I was trying to keep it below 20 minutes, but I can never keep a video below 20 minutes. I just don't know why. It's too much value here, okay? With that being said, I've shown you guys devil in the details. I've shown you all fundamentals play a very important role in driving market sentiment and liquidity conditions in global markets across the board, not only in crypto. You guys got to start paying attention to these things. It'll only benefit you. You see no indicators on my charts, no magic Fibonacci's yet. Time and time again, we are able to call out accuracy across the board, and we will continue to do so. Right. So I will give you guys an update if we see a shift in market sentiment. I really hope you all have been paying attention. There's an easy way to do that. You all either follow us on X and wait for us to drop these reports that get drip fed, right? Because we don't give all of our updates and our reports publicly to you guys. Or you could tap into the private CYPRX Discord, get these updates in advance on the day that they're dropped, every single day that they're dropped, and you can have access to our private community Zoom calls and these institutional deltas and all the buttloads of information that come inside the CYPRX Discord, which is literally 9 years of experience for myself and over 13 years of experience from the other mentor that's inside CYPRX of just documents, fundamentals. You could ask questions. Obviously, of course, you can interact with the other community members. I mean, it's so monumental to just be a part of this digital transformation and be an accurate community. All right. So many blessings to you guys. Really hope you enjoyed this quick update showing you guys, time and time again here at CYPRX, we're going to continue to put our money where our mouth is at and show you all real accuracy. So with all that in mind, many blessings to you guys. Be cognizant out there. None of this is financial advice. Do me a favor. Again, if you enjoyed this, smash that thumbs up button, subscribe, and I will see you all in the next video breakdown.